Assalamualaikum. So in this video, we are going to continue with a topic warrant. Okay, what is warrant? Warrants are derivatives that give the holder right but not the obligation to buy or sell a security, so most commonly an equity, at a certain price before expiration. Warrants and options are similar in the sense of both instruments allow the holder special right to buy securities. Alright, so both are discretionary and have expiration dates. Warrants are frequently attached to a mother security, either bonds or preferred stock, as a sweetener, okay, allowing the issuer to pay low interest rates or dividend. Okay, so warrants are generally issued by the company itself, not a third party, and they are traded over the counter more often than on an exchange. Okay, so it acts as a sweetener to promote the purchase of the mother security, referring to the bond or preferred stock just now, and they can be used to make the security more attractive to the potential buyers. Okay, so these are the characteristics or features of a warrant. So number one, warrant has an exercise price, okay, which the amount that an investor has to pay in purchasing the common share. And then number two, it has an exercise ratio, which is the number of shares that can be purchased or sold upon exercising a unit of warrant. So for example, a warrant allows you to purchase 50 units of common stock at 15 ringgit per share. So the 50 unit of common share is the exercise ratio, and then 15 ringgit is the exercise price. Okay, and number three, the warrant has an expiration date, okay, which the warrant is no longer valid after the expiration date. So for example, if the expiration date is on the 30th October 2021, thus the warrant is no longer valid after the date. Okay, so this is a call warrant, okay, which warrant to buy. Okay, so it has a strike price. Strike price ni sama jugalah dengan exercise price. Okay. Okay, so the strike price is often initially set as out of the money, so tak ada keuntungan, alright, which is above the current trading price of the underlying stocks. Okay, so holder of the warrant will have to wait for the share price to rise above the strike price before exercising it, and then attractive when price of the underlying share is expected to rise in the future. Hence, the warrant holder may exercise the warrant and purchase the shares at a lower than a market price. So for example, if the common share price today is RM 5 ringgit, okay, so the strike price of a warrant is set, okay, out of the money, tak ada keuntungan lagi. So it is set at 5 ringgit 50 sen. So if the common share price is 5 ringgit, do not exercise the warrant because tak ada keuntungan lah if you buy at a higher price than the market price. Okay, but you have to wait. So ketika ini attractive when the share is expected to rise. So if the common share price increase at now, current common share price increase at let's say RM 6 ringgit. So when the common share price is at 6 ringgit, so now is the time to exercise the warrant. So you are able to buy the share at a cheaper price, which is 5 ringgit 50 sen. So you are in the money lah. So dapat keuntungan kat situ 50 sen per unit when you exercise the warrant, which enable you to buy at a lower price than the market price. Okay, next is a put warrant. Okay, so this is a warrant to sell. Okay, so the strike price pun sama juga, is set as out of the money, okay, which is below the current trading price of underlying stock. So holders of a warrant will have to wait for the share price to fall below the strike price before exercising it. So it is attractive when the price of underlying share is expected to fall in the future. Hence, the warrant holder may exercise the warrant and sell the share at the higher price than the market price. So if let's say the same example with the just now, so common share price today is RM 5 ringgit. So strike price of the put warrant, okay, is set at RM RM4.50, which is out of the money. So if you jual sekarang tak ada keuntungan lah. Harga market price RM5. So if you jual now RM4.50, tak ada keuntungan kan. Okay, but then if the price of the share is expected to fall, if let's say the common share price fall to RM RM4, so now it's time for you to exercise a warrant, which is enable you to sell at a higher price, which is RM4.50 when you exercise the warrant. So dekat situ dapatlah keuntungan 50 sen, which is you are able to sell the share at RM4.50. Okay, when the market price is RM4. Alright, so these are the advantages investing in warrants. So it is much cheaper than the common shares, and then give right to the holder. So investor do not have to exercise the warrant when the stock price drops, and it is marketable. Okay, while the disadvantages investing in warrants, so warrant does not provide any interest or dividends, and when warrants are exercised, the number of shares will increase, so the shareholders' holding will be diluted, and then it has an expiration date. Okay, so this is how to calculate the theoretical price of a warrant TP and warrant premium. Okay, so the TP is the theoretical price of a warrant is equal to market price of common share, you minus with the exercise price, and then times with the exchange ratio ataupun exercise ratio. Okay, so to calculate the warrant premium is equal to market price of a warrant, okay, minus the theoretical price in RM. So dapatlah warrant premium. Okay, and then to calculate the warrant premium in percentage, okay, in percentage, the market price of a warrant minus with theoretical price, and then divide with the theoretical price, and you times with 100%. Okay, so this one is to get the warrant premium in percentage. Alright, so this is the example. Okay, Wastini has a warrant that entitles her to buy 3 units of common share. Okay, so this is the exercise ratio. Exercise ratio is 3 units. Okay, the exercise price of a warrant is RM RM17 per share. So this is the EP, RM17 per share, and the market price is RM12. So this is the market price of a warrant, okay, which is RM12. So if the market price of the company's common share is at RM20 each, so market price of the common share RM20, should the investor exercise a warrant? Okay, what would be the theoretical value of the warrant and the warrant premium? So this is how you calculate the theoretical price of a warrant, which is market price of a common stock minus with the exercise price times with the exercise ratio. So TP is equal to market price of a common share, given here RM20, you minus with the exercise price, which is RM17, and then you times with the exercise ratio, which is given here 3 units. Okay, you akan dapat the theoretical price is equal to RM9. Okay, so to calculate the warrant premium, okay, is simply market price of a warrant, you minus with the theoretical price. So the warrant premium in RM is RM3. So ini in RM. So to calculate the warrant premium in percentage, okay, so equal to market price of a warrant, ni RM12, minus theoretical price RM9. Okay, and then you divide by the theoretical price RM9, and then you times with 100% lah ni. Okay, you dapatlah 33.33%. So this is the warrant premium in percentage. So that's all for this video. Thank you.